Good afternoon, ladies and gentlemen. Welcome back to another episode of the Black Swan Capitalists. On this channel, this is where we focus on history before it happens, not after the fact, where we connect the dots that most people are either not looking at or just ignoring, simply. For nearly 8 years, my brother and I have been documenting the structural transition unfolding across the global financial and geopolitical landscape. And we've done so with a track record that does speak for itself. Now, as we enter the new year, the volume of change is obviously accelerating. There is so much happening simultaneously that it becomes almost impossible to explain every moving part in isolation without losing sight of the bigger picture. And that is why discernment in 2026 is going to matter more than ever. We are at a point where information overload is now being weaponized and where narratives are simply manufactured faster than the facts can be verified, and where people are being pushed to outsource their thinking to AI rather than develop it for themselves. Now, I understand the truth is uncomfortable, but we are witnessing the digitization of everything. That includes assets, identity, money, governance, and potentially human behavior itself. That reality, ladies and gentlemen, understandably unsettles most people. I get that. But at the same time, there are profound opportunities emerging for those who are willing to understand what's actually being built beneath the surface. Today's conversation is about separating the signal from the noise, as the usual, fact from fiction, and simply understanding what is possible based on observable trends rather than blind belief. This is why I'm very pleased to welcome back one of my good friends and most respected independent economists and thinkers of our time, my good friend, Dr. Jim Willey, who has been analyzing the monetary systems, precious metals market, debt markets, global capital flows for decades. His background in statistics and applied mathematics gives him the framework that is simply grounded in data rather than ideology, like most people. Jim has consistently been early, often uncomfortably so, but rarely wrong. Jim, as always, I'm honored to have you on as my first guest of the new year. So thank you very much for joining me on such short notice. It's always a pleasure to speak with you.
Oh, it's fine. I tell you, these are exciting times. They really are. We got so many challenges to deal with, and it's difficult, but I think it's quite predictable, the flow of events. And the hard part right now is my clients call it connect the dots. I call it interrelationships. Just seeing how one area affects another, how treasury bonds and crude oil and silver and gold and the Japanese yen, it's all interconnected. And right now, I'm having kind of an epiphany. Oh my gosh, look at what's happening with silver. And we expected it. But do you think there's a connection with XRP?
Haven't thought about it.
Yeah, that's what I'm going to bring to the table, my man. All right. If you're familiar with the domino theory that Jake Claver has put forth, you'll hear that there's a problem with the yen. The yen carry trade goes into reverse. Money comes back into Japan that was used to, borrow the 0% money and invest in U.S. treasuries, borrow 0% yen money and invest in euro bonds, and borrow yen and invest in whatever you want globally. Well, now they're raising interest rates and their long-term rate is going up, their bond, and their currency, I think it's having like a last hurrah of weakening, because when this flood comes back, you're going to see a 20% move in the yen. Now, there were rumors, and there was nothing in a follow-up, but the venerable Warren Buffett I don't know exactly what it was. He let a rumor fly that he was going to invest $340 billion in the Japanese yen.
Yeah.
And now he's halfway out the door, retiring. I'm sure a lot of people think he's a good guy, but I think he's a liar, because in 2005, he got called away from his silver option calls, and he lied and said he sold too early. No, he got called away. He was earning income after he said that gold and silver have no income. Yeah, they do if you sell covered calls. His 130 million ounces is the basis of SLV, the fund, managed by Barclays originally. Barclays, way back. Okay, so the theory goes that something is going to trigger higher rates in Japan. And a lot of people thought, or Jake thought, that it could be higher oil price. Now, this Venezuela issue right now, is that going to cause the rise in the oil price? Will there be an embargo where nations like Iran and I don't know what other country might join Venezuela, but we might see a reaction in the oil price. That's one possibility. There's no question we're seeing a reaction to the dollar problems in the silver price, no doubt. And now we're starting to see, is it 51 billion or is it 75 billion for emergency repo that's going into the big banks in the United States? Okay, there's rumors that there's a Wall Street bank that died, and we don't have a high enough level of elitism to warrant information. Okay, the scoop I hear is that Bank of America entered a failure. That's the scoop I heard. They needed $17 billion, and I believe a large chunk of that went to cover their short position in silver, which they might have been forced to close out. Mm-hmm. I believe that the next 28 billion, 24 billion, I think that was for JP Morgan to close out their silver short contracts. Mm-hmm. I got scoop that JP Morgan is now long silver, 750 million ounces. If you followed closely the events of Thanksgiving weekend, yes, they pulled 24 million ounces of silver off the ramp. I mean, it was ready to go on the ramp, Versan. It was ready to go straight from the vault to the ramp for a delivery, and they pulled it and put it back in the JP Morgan vaults, and it's up $20 since then. So that was a good move. That's $400 million.
Yes.
That's a good move. Now, there's something called Gresham's Law. I don't know that you've heard. It's a bit obscure, but it goes like this. In times of monetary crisis, the highest quality currency vanishes to be hidden, and the poorest quality is used in transactions and seen in the open. In other words, for 10 years, gold was hidden. Now what you see is silver is pulled back from the vaults, no longer eligible for delivery, and it goes straight into the JP Morgan private corporate vaults. That's not the right term. They're corporate vault. No longer available for delivery. I think COMEX is going to shut down and have a force majeure. We're not ready for that. I can tell you there are a lot of clients who don't know what that means, and it's going to have some rub, okay? There might possibly be some, it's not going to be confiscation. It's going to be, what's the word? Commandeering. Mm-hmm. It's hard to get the right word. They're going to say, all right, Joe Blow, you've got $5 million worth of silver. We're going to take it, and we're going to give you $72 for your silver. But the complaint's going to be, that's not a fair price. The complaint's going to be, but in Shanghai, it's $18 higher. And New York is going to say, we're not Shanghai. We're New York. Your account is subject to New York rules, regs, and procedures. So this is what we're going to do. And if you don't like it, you can file a lawsuit where we'll be on the other side of your lawsuit, negating your entire argument, and you won't do anything positive except lose money to your attorney staff. Okay, that's Wall Street.
Yeah.
Okay, and COMEX is an appendage of Wall Street. CME is the same. What's that? Chicago Mercantile Exchange, CME. That's just COMEX in Chicago. They work hand in glove. All right. So here's let me give you just the quick nut of my domino theory that goes parallel with the crude oil hitting the yen. If crude oil goes up in price, the Japanese are going to raise interest rates because it'll cause inflation and blah, blah, blah. But there's something bigger. There's something bigger. It's Wall Street's lying. They lie. They defraud. JP Morgan has never admitted guilt in a prosecution. They always settle out of court. They've got about 250 billion in fines and penalties from settlement out of court. They are saying that Wall Street has about $200 billion of borrowed Japanese yen that is invested in treasury bonds.
Interesting. Oh,
can you multiply that by 10 or 20 to enter the world of reality in which we live? I think they've got 2 to 4 trillion, not 200 billion. You think they passed up, honestly, tell me, you think they passed up a chance in 25 years or more, 30 years almost? You think they passed up a chance to borrow the socks off the yen and invest in treasuries that were paying 6%, 5%, and 20 years ago they were paying 8%? You think they passed up that chance? No. You think they passed up the chance to put a third of it on treasury bond futures to leverage up the gains? I contend that Wall Street earned something on the order of $5 trillion off the books. And they got about 4 or 5 trillion right now. It could be 7. How would we know? Maybe the Exchange Stabilization Fund is doing their trades, which is something that gets people killed in talking about. So I won't talk about it. Rob Kirby did, and he got killed. Okay, so back to silver. We got a tremendous liquidity problem in the big banks. I did not say in the treasury bond market. I said in the big banks. They're short silver. They lost enormous sums of money. They blew gigantic holes in their balance sheet. They got bailed out by the Fed in the middle of the night. Not disclosing what bank is in trouble, near-death experience. That's not the right phrase. A failure that was barely averted. Okay. These banks have been insolvent for 10 years.
Oh, I believe it.
Yeah. So back to the domino. If the big banks have holes in their balance sheet and they're underwater with their bond portfolio, you remember 18 months ago, early 2024, we heard the banks are $840 billion underwater with their bond portfolios. They didn't say treasury, but that's the dominant asset in bond portfolios. It's not IBM or Google corporate bonds. It's treasury bonds. The treasury bonds crowd out the market. They're the dominant player. They borrow like hogs, and there's not a whole lot left for the rest of the market. So if these big banks have a hole in their balance sheet from silver, they're very likely to sell treasury bonds even at a loss in order to get liquidity flow and get more patches from the Fed on the new holes from their treasury bonds, and then you get the liquidity crisis. Okay, the key for the domino theory regarding XRP is a liquidity crisis in the banks, in the credit market, globally. Now, because of the silver problem, European and British banks have sold a lot of treasury bonds. There's a run on treasury bonds, and we're trying to hold it back. And I believe the Exchange Stabilization Fund is on the scene, preventing a disaster. But the important part is that silver, and not crude oil, has caused a liquidity problem and a credit crisis. And, if they cut rates, I'm telling you, what a comedy. If they cut rates with a $38 trillion debt in the midst of a currency crisis that's evident within silver and gold, we're going to see the long bond go up in yield, just like they did in 2024. And I got that call correct.
Yes.
Independent of my colleagues. I just said, that's stupid. Makes no sense. There's a currency problem. There's a debt problem. There's a deficit problem. The long bond is not going to like it. The long bond is going to go up. We're going to get a steeper curve. And that's exactly what we've got. And we're going to get it again. And it's going to cause a liquidity problem, Versan. The silver market, I think, may combine with a double helix.
Yeah,
my voice.
Like another contributing factor for sure.
Yes, but interwoven.
Yes.
They're not going to be separable completely. This is very interesting because little known fact is the petrodollar derivative contract has a gold silver component to it. Of course, it's the dollar and oil, but there's a gold silver component to it in the petrodollar derivative. And Versan, it's at a 30-to-1 ratio. So when you get liquidation of the petrodollar contracts, you get a movement toward 30. And I believe that there is some liquidation going on with the petrodollar contract, the derivative, that has, just say, narrowed the gap. What are we down? 50, 55 for gold silver ratio? Used to be 90, 95. It touched 100. Okay, we're about almost half of what it was before, which means silver has double the gains. And this is exactly what we expected. We're getting what we expected. We didn't know what the catalyst would be. I think the catalyst is two things for silver. You got solar panels and electric vehicles together. And let's never leave out the military component of missiles.
Oh, yeah.
Okay, so you got EV batteries, you got solar panels, and you got missiles for war. And we love war. We changed it to the Department of War, not defense, because we're waging war. Okay, this is crazy. I hate endless war. I hate it because it's service to Satan. Causes misery and destruction and death. Okay, so where was I? I lost my point with my own enthusiasm. The silver gold ratio is way down. Oh, yeah. We have electric vehicles, solar panels, and military missiles. But the other side is the weak dollar. And this is almost funny. I find a lot of humor in our work because it's from blind spots. It's from wrong impressions. It's from acceptance of propaganda. And it's from basic stupidity. There's a lot of stupidity in our societies. You talked about outsourcing thinking. Oh, I wrote that down. Okay. We are watching now the dollar decline. Here's the funny part. People tell me, Jim, the dollar's going to crash. Yeah, I know your forecast says the dollar's going to crash. I said, no, I didn't say that. No. I said the dollar is going to be devalued versus gold, the super currency.
That's correct.
The super currency. I said the dollar index, USDX, it's 52% euro and British pound and yen and a few other things. I think there's a little percentage now in the yuan in China. I said to my clients, if the dollar goes way down, that means the euro is going to go way up. Could you tell me where the strength is in the European economy? Nowhere. In fact, they're collapsing. Right now, we're dealing with the collapse of the German industrial complex. not hardship, shutdown, collapse, and negotiation with Russia to drop the sanctions. Okay, a lot going on. So the two parts are industry for silver, including war, and basic decline in trust for the dollar. The dollar's going down versus silver and gold.
It's true.
I saw a very interesting argument. It was a couple of years ago. It said, take the price of a Roman elite tunic, a robe. Now take the price of a high quality, but not super quality, a high quality tailored suit. Okay, well, that's about the price of an ounce of gold. It hasn't changed. Gold's not changing. The dollar is.
Yes, everything around it is.
Everything around it with the price. Oh gosh, I just had a client write to me today and said, Jim, I donated $15. Very sweet, very sweet. I donated $15. It's all I can manage right now because my health insurance went up $240, $250 a month. Okay. The only thing that's not going up in price that I know of is gasoline.
Yeah.
And why is that? Because the Rockefellers sabotaged the supply chain in the previous 4 years with the dead man Biden as president. Now, I'm not joking around. The dead man Biden as president with a sequence of clowns pretending to be Biden who were dead a year before the election in 2020. People, you need to wake up. Okay. So
there's some interesting things going on over there. I agree with you.
All right. I believe silver is the fuse. We knew long ago. Gold will wreck the dollar, but silver will kill the banks.
Interesting.
And we're seeing that. That's an interesting distinction. We're seeing that. And we're not done. Oh my gosh. Here's another angle, Versan. I don't know if you've thought about this. If JP Morgan, which cannot die, systemically important bank.
Yeah. SIFI.
Systemically important financial institution, SIFI. Let's just make up a number. Let's just say they're $50 billion in the hole. Okay? If you mark to the market, consider all their shorts for gold and silver, let's say they're $50 billion short. Now, let's suppose they get their hands on 5 billion XRP coins.
Okay.
We move $10 and they're out of the hole.
Interesting. So a higher XRP price kind of kills more of the friction that they need. If I may make a comment to complement what you said, there is another angle to this, and I totally agree with you. That's a very interesting analysis because also at the same time, we are seeing, you could say, the suppression by the bullion banks. There is also repeated regulatory slaps on the wrist rather than just allowing structural reform to naturally take its place. I do think BRICS and China and some of the other aligned nations are actively participating in this to undermine the price control mechanisms. And from my take, I think to complement yours, that the sustained breakout in silver, if it keeps going higher, it would expose all the systemic leverage and potentially break parts of the banking complex that rely on the derivatives and the rehypothecation.
It has begun.
It has begun. So to your point then, this is where I think few people truly understand how complex and interconnected what you've explained is. But this is exactly how things have the United States banking system or cartel has survived for decades. Now, what's interesting about the Japanese carry trade, reverse carry trade, I'm sorry, is, and we've covered this before, but this is kind of the pressure point where credit markets begin to strain and the leverage we just discussed is exposed. And then margin calls start hitting, right?
They've already begun.
It's already begun, right? So as money then flows back into Japan and the credit markets become under pressure, that need for the neutral instant settlement system outside of the dollar or yen becomes unavoidable. And that's kind of where XRP steps in, correct?
Yes. And more. XRP would liberate anywhere between 15 and 20 trillion dollars in Vostro Nostro. This is called correspondent escrow accounts. That's idle capital that could be used to patch over liquidity problems, could be used for investment purposes, could be used for business investment, business loans. Let's face it, since the lockdown, the banks are not really lending institutions anymore. They've really cut back. The commercial real estate market is more like a predatory field. Yeah. What bank is going to steal the title on office buildings because they collude and will not roll over the mortgage, the commercial mortgage? Oh my gosh, they got a 7-year mortgage and they're not being able to roll them over. I know personally a man who has a good friend, and it was in Minnesota. He lost $40 million because they couldn't roll over the commercial mortgage on an office complex. It was a $160 million complex. He was a 1/4 owner. They couldn't roll it over. They had to hand over the keys. That's the phrase, hand over the keys to the banker. Now, the banker lent the money. Was it their money? No, it was funny money from the Fed. So the bankers are involved with some very profound fraud that might get resolved in the next few years and might not. But I believe Japan is on a path right now. Okay, what I believe is happening, Versan, is Japan is offering Wall Street banks, this is your final discount on the yen. You borrowed yen and they're cheaper now. You better pay back and bring back the yen and close out your trade with your $1 trillion or $500 billion position in treasury bonds. You better do it now because the yen is going to rise and you're going to be part of the force and factor to make it rise. Yes. The Japanese are the biggest investors among all the foreign nations for euro bonds. The biggest of all the foreign nations in UK gilts. They're the biggest foreign investor in US treasuries. They were tied with China. Remember, like 10, 12 years ago, China had 3 trillion. Now they have 1. Okay, my basic question is, if China had $3 trillion in treasuries and mortgage bonds back in 2012 and 13, where did that 2 trillion go? Because now they only have 1 trillion. I'll tell you where it went. It went to buy our Congress, to buy our military, to buy our Silicon Valley, and to buy our court system. Any other questions?
Very interesting.
Bribery.
Oh yeah, I mean, they're entrenched.
And you know, the word is out there, Versan, that, oh no, they bought a lot of commercial buildings in 30 US cities. Hey, you know, I've added them up. That might be 50 billion.
How about the other amount?
How about the 2 trillion, Bubba? Okay, and I just don't take bullshit and say, that's that. Let me put a little salt on that and swallow it whole. No. I throw it right back, and it gets me into trouble because I'm a bit bold and insolent. You should have seen me in high school and grade school.
Oh, I would have loved to have seen that. Yeah. Can I bring up a very interesting point?
Sure.
It's so crazy, again, how all these moving parts simultaneously are unfolding. And essentially, I think for some of our listeners here and you and I, we're at a point where we're kind of letting the macro setup unfold and do the heavy lifting for all of us as investors. Now, this is where it gets really interesting based on everything we just talked about. And let's say, you know, the banking system is under pressure, which of course it is. They're extremely leveraged. They're involved in massive fraud. God knows, one falls, they all start collapsing maybe.
They're all lashed together. They're lashed together after Lehman in 08, 09.
Right. So this is where it gets interesting because another development we've been covering here alongside you and many others in this ecosystem that can't be ignored is the evolution of what Ripple is doing. The fact that Ripple is now pursuing a banking license and trying to operate as a qualified custodian, positioning itself really as a trusted intermediary for financial institutions and governments. This is obviously not the behavior of a payment startup. This is kind of the behavior of an entity that seems to be integrating itself to the core of the financial system. And we've covered this before.
A gigantic right. piece.
Well, see, if Ripple now becomes the trust layer, the institutional on-ramp and the compliance gateway, then logically that would mean XRP becomes the settlement engine beneath it. We've confirmed that. But in that sense, then XRP is not competing with banks. It's essentially replacing the function that banks perform between intermediaries. So holding XRP at this point, it's become very clear that it's not about owning a speculative asset. It's really about holding the settlement instrument for the new system. Some have, go ahead.
I call it, okay, just try to imagine in the 1980s and 90s, okay? The unregulated embryonic email system. Okay, I remember I had, okay, this is a funny story. I had a Yahoo account and I had a Hotmail account, and they were both for fun. And I used each one to send anonymous poems to a beautiful girl at Staples.
That's cute, Jim.
There's no phone number. They're anonymous. Okay, imagine back then if you owned a brick in the email infrastructure. And we know email just exploded. It's 100 times bigger than it was in the 1980s. Well, if you owned a brick, then you would get rich because the bricks would be necessary to own and operate and put in place. That's what's going on right now. I've got a really good argument to make that we're not going to see an XRP price based on an equilibrium of supply and demand at Coinbase. We're not going to see that. We're going to see a predetermined price that is so high that it's going to blow your hair off, rip your face off. It's so high that it was agreed upon by a group of powerful people and corporations at a level that would function as the global standard in transfer payments as a bridge asset. What are the giant players? Well, there's the IMF, there's the Depository Trust working with Bank of New York Mellon, there's NASDAQ, there's SWIFT, and there's Wall Street and all the big banks. And there's more. There's a lot more. There's more that, I'm not very familiar with, but, it's just background financial structures. Central banks, that's another big piece. They got together. I believe this happened 5 years ago. They got together a long time ago and said, we want to limit the public ownership, so we'll do some frivolous SEC lawsuits. We don't want the public to own much of this. And let's just agree on, initially a $5,000 price. And eventually it'll be maybe $12,000, but we need this thing to work. It's going to be a brick in the transfer system globally for moving money, moving value. I don't like the phrase moving value. It's almost always moving money. I mean, if it's a title of a commercial property on the blockchain, moving what value? The value for sale, the value for a mortgage, the collateral. Okay. Anyway, I don't want to get caught up in value, but Internet of Value. Okay, moving value, transferring value. Fine. I call it funds. I call it money. You can call it value if you wish. No. Imagine now you're an owner of a brick, and you got a bunch of these bricks, and they're called XRP coins, and the price is not moving, and this is bothersome, but it has an easy, acceptable explanation. Yes. They're loading up the bricks. I don't mean bricks like Brazil, Russia, India, China, and South Africa. I mean the building blocks. That's better. The building blocks are being put in place by BlackRock, JP Morgan, Bank of New York Mellon, and NASDAQ. Just them.
Mm-hmm.
And you got a minimum of a couple $100 price real soon. Okay, we're not going to see Uphold, Binance, and Coinbase determining the price.
Yes.
They're loading up. There's all kinds. There are billions of transactions going on, not on the exchanges. Why? Because they're loading the building blocks into place.
Mm-hmm.
And the value of those building blocks will be set in order to move the volume of funds that they design.
Yeah.
This is not profit loss. This is not a stock. This is not how many shares and what's your profit margin. This is building blocks, moving huge volume. You know, this is going to be an all-at-once event. You think?
I mean, it could be for sure. I mean, it's one or the other. I think it's going to be all at once, and it will take a massive crisis to kind of.
Can you? Okay, let's just take one example. Imagine NASDAQ. They see Bank of New York Mellon beginning to roll out the derivatives with the DTCC, with derivatives, beginning to roll them out, tokenizing and conducting transfers. That's a quadrillion a year. Divide by 12, it's 80 trillion a month. Divide by 30, it's about 3 trillion a day. Okay, that's just derivatives. Then you got the central banks with the CBDCs and all kinds of foreign countries doing trade payment. Okay, that's going on, and that's rolling in, ramping up. You think NASDAQ is going to say, let's wait a couple years, let's wait a year, let's see how it works out? No, hell no. Yeah. Hell no. They're going to say, we want it now. Mm-hmm. Those guys are saving 80% on transfers. That Bank of America has already stated that. They save 80 to 85% on transfers in volume. And Jamie Dimon made a comment. He didn't talk about how much they were going to save. What he said is we're moving $4 trillion a day.
Yeah.
JP Morgan Chase.
Well,
they're not going to sit around, Versan. They're going to want it all.
Okay, yeah, I mean, I'm getting goosebumps here because a lot of this stuff, I had it displayed just a moment ago. It's an article I wrote back in 2022 where I explained that the XRP price was agreed upon to be set at a very high price because how I tried to explain it was a bit different. And it's nice for me to revisit this with you because what I've explained is that treating it like stakeholders aren't, just small time investors we're talking about. But I've been in private meetings with my father before in the past where shareholders were all sitting there. They agreed upon a price before taking it public. And I was explaining how XRP to think about it in the same sense or context, because in this case, the stakeholders or shareholders, would be the central banks, the large financial institutions, the governing bodies like JP Morgan, BlackRock.
The giant banks.
The giant banks, exactly. And I've gone as far as explaining to people before that XRP's ability to reach a very high price, it's not a fantasy. It's based on a mathematical necessity, something you're very familiar with. Because if it's going to function as a bridge for global liquidity, and it has the divisibility aspects into drops, that ensures the usability at any given valuation. But the finite supply guarantees the scarcity based on its intrinsic value and use case. So for it to be fully integrated into the digital system, the XRP price must reflect the magnitude of what it was designed to move, right?
The volume.
The volume, yes.
Yes.
Very nicely said. So I totally agree with you. And I want to take this now into a different area of the conversation.
But let me make a comment. Ripple already won the bank license.
Oh, I believe it. I mean, I think all of this has been actually sealed behind closed doors.
Yes. And to me, it means something really important. It means JP Morgan and BlackRock got their several billion coins of XRP.
Yes.
There's a quid pro quo. You do not get membership into the Wall Street community like Ripple just did without giving up something. And that is private OTC deals, dark pools, whatever. Okay, they drained the exchanges. of XRP, like 90% or more. Where's the price movement? That's all done with, I'm sorry to say it, but it's done with collusion.
Oh, absolutely.
Okay. All right. Well, we're going to be the beneficiary because when they turn on this building, the electricity is going to work. The water is going to flow. The heating system is going to work. The sewer will work. The plumbing, all the different types. Bang! It's not going to move. It's not going to go to $3. It's going to go. It's going to go with some zero, at least 1 0. Okay.
Absolutely. But
all right, change gears. It's your show. I'm sorry.
No. It's great. I love this back and forth stuff. But this is why I've argued that what this means effectively, it turns the holder into their own central bank, not in the traditional policy sense, but as an active participant in liquidity provision and full settlement as far as finality.
It means we can stake. People haven't thought about what it means to stake.
We've talked about it, but there's a time and place.
You have, but my side hasn't. My gang, the other shows that I deal with, XRP, we haven't talked about it. If you're staking, then you're going to be committing your building blocks to a functioning system, and there will be a reward. The interest that I'm hearing is going to be so much higher than what the big banks offer that the big banks are going to have to adapt into stablecoin offering dividends, or they're going to go away.
Yeah. I have a different view on the stable coins. That's something maybe we could tackle later on. Okay. See, what I get concerned about as far as the stable coins is that, first of all, you have a lot of the banking cartel entrenched as far as the stable coin, right? It's essentially, I think, keeping the dollar afloat because it creates demand for T-bills. The other thing is, I think later on down the road, people are going to start to realize that stable coins are just as toxic as the dollars associated with them.
Exactly. Right? They're treasuries with a different name on them.
Yeah. So it's essentially a toxic asset that's offering you a yield on it when it just creates the demand for more dollars.
And the Eurobond is also collateral for stable coins in Europe.
Yeah.
Okay. What we've got is, and the Russian deputy economic advisor 2 months ago, he got it right in October. The West is dumping sovereign debt into the stable coin. I call it the ocean of liquidity. And there's going to be a reckoning, and I don't know how it's going to work, Versan. I'm kind of leaving that alone right now because there's so much more on the table. I think in the next couple of months, we're going to have systems turn on. And you're going to see the building will be pressurized, and pressure means higher price. This is going to be exciting, and it's going to make some millionaires, but unfortunately, they spent a lot of time minimizing plebeian ownership. Now that didn't stop you or the people who followed you, but I only started mentioning XRP in late autumn and late 2024.
I remember when we first started communicating, I kept pushing it on you and telling you about it.
I had to learn. I mean, I'm busy, but
I know that, but I remember those days, right?
Yeah, it was a couple of years ago, I think. Anyway, what we have now is the climax approaching. I mean, Jake Claver, I know someone who's actually met and talked with Jake Claver. I mean, you have?
Absolutely. I've met Jake Claver back in 2022 at a function.
Okay. Well,
we had a few drinks together.
Well, get him to loosen up. But now, if you get him to loosen up, you might hear about something regarding a non-disclosure agreement. Anyway, my friend had a dinner engagement with a conference dinner, and was able to talk to Jake for about 90 minutes. Let me just share some nuances, okay? Because, if you got a non-disclosure agreement, let me just give you an example. Because when I was in college, my roommate had a mother who did analysis of handwriting and body language. So I read a book that my friend handed to me Okay, let's suppose I have a non-disclosure agreement and I'm involved with Ripple, and I go like this. What does that mean? Or I have a non-disclosure agreement.
No, can't say
Okay.
something.
Body language. Okay.
Mm-hmm.
Body language is a large part of communication, and I'm just having fun.
No,
but
I appreciate it. Mm-hmm. Well, let me tell you something. You know, I've said this before, real quick. For anyone that's doing their research, and I mean really doing their research, you don't need a non-disclosure agreement to anticipate what's coming on.
I know, but when you hear Larry Fink say, I can't talk about Ripple and ETFs that are spot XRP. I can't talk. What do you mean, Larry? Come on. He said, I have a non-disclosure agreement. Okay.
Listen, Larry Fink is so full of shit, and most of these analysts and economists and these guys that go on the mainstream stage, they drop a little truth bombs here and there, but that's about it. The idea, I think, is for people to really engage themselves and understand fully what's happening to them in the world. And that's really how you can position yourself and at least anticipate what move is coming before it makes headlines. Because, right, go ahead.
Let me share with you the body language that was shared.
Okay.
By Jake.
Okay.
He was saying without words, something big is coming. I can't tell you about it. The price is going to blow your socks off. It's going to be turned on. It's going to be a global standard, and I can't talk about it. So I'm just going to make facial expressions while you talk about the topic that I cannot give you details on. There you have it.
That's my point, though. I mean, we've been covering this forever as well, and dropping a lot of these truth bombs before other people picked up on it. It's very clear. It's very clear how things are going to play out. And what I was told by Martin Armstrong and a few other people off record, who I think are far more informed than anybody else, including myself, that Versan, it is going to take a real geopolitical crisis to get XRP off the ground. And I've anticipated that as well for a long time. So compliments to our friend Jake Claver, our mutual friend. But one thing I did want to focus on, taking the conversation to the next phase, and this is something you and I together, it's a theme that we've been both very vocal about, and it's now becoming increasingly supported and clear by the institutional frameworks rather than dismissed as a fringe theory. And for years, I've been arguing that the future of the monetary system via XRP and blockchain technology would involve a marriage between tangible assets and digital infrastructure. So not fiat backed by promises, but value backed by real commodities. And what I'm seeing now, and what I've been reporting on extensively, is the convergence again of metals and commodities with blockchain-based settlement layers. Tokenization represents the digital translation of value into units, whether it be XRP or something else, but the broader commodity markets. So I think there's going to be some sort of basket of commodities that's ultimately layered underneath the XRP itself, something along those lines. Now, this is where it gets interesting. Many people still dismiss the idea. And what they try to do is look at quotations of individuals in the crypto space making statements. In my opinion, I don't trust a lot of the people in the crypto space that say things. So as you know, I really look at the architecture. I look at the intent, incentives. I look at how things are being implemented rather than sound bites. And last year, you made this statement on my podcast, and it stood out to many people who agree with us. But you said XRP would effectively be gold backed, but that truth would be obscured until it became unavoidable. Basically, you said they're going to lie to you. So that's something I agree with you on. And I just wanted to see if your thoughts still stand as far as the marriage between the two.
I'm more focused right now on commodities, stocks and bonds being tokenized. I think down the road, okay, we haven't seen gold find its proper value. Okay, get back to me when we're near 10,000. Then I think that will have some merit for linking XRP. But by that time, XRP is going to be a lot higher. Okay, we're not there yet. We're in the early stages of global crisis. Okay, I said 2 years ago that we're working our way toward layman times 5. That's where we're heading. Okay, regarding the tokenization of commodities, there's several that are already with an exchange traded fund. Copper, uranium, they already have ETFs. Platinum, it has an ETF, have a few. Okay, they're not well known, but they have some. We're eventually going to get into like an agricultural basket. Okay, the big three: soy, corn, wheat. There's going to be an ETF for soy, corn, and wheat that's tokenized, and you're going to settle contracts, farm agricultural trade. There's a lot of different things I could say about that, but I don't want to get off track. The ETFs are going to expand. Okay, right now, the XRP ETFs are the second most successful in modern history. Number one is Bitcoin. And we saw what happened with Bitcoin a year and 2 years later. It was up tenfold. Okay, we're going to see the same thing with XRP, but I think it'll be even more than tenfold because it is the brick, it is the building block for managing flows, and its price must be proportional to the volume of flows.
Yes.
Okay. I think we're going to see some wonderful things happening with XRP relative to SWIFT, which I think has executives that are basic liars.
I'm going to pull this document up in the meantime from SWIFT. I have a document from SWIFT warning people about it.
They lie about XRP.
Right here. So this came from SWIFT, and they were explaining, on the other hand, infrastructural players such as SWIFT and Bolero may be better positioned to take advantage of this space by owing to their position as third-party entities, casting the net wider. Financial services focused on blockchain firms such as Ripple Labs could also play major roles here. Now, this is where it gets interesting. General consensus amongst the banks, non-banks, however, is that mainstream blockchain applications and trade finance are about 5+ years away. We're there now. Now, this is where it gets crazy. It explains here that banks need to keep innovating, and they're talking about the banking cartel, essentially. Now, if they do not, new technology and fintech competitors will threaten to shun the banks out of the space they historically dominated.
We're there.
2015, my apologies. Holy shit.
Oh gosh, I can't remember the exact number, but I think it's something like 16,000 banks.
Yeah.
And they're all using XRP with their SWIFT settlement. Oh, I heard a great phrase. It's a mockery analogy. SWIFT is not really a transfer company. They're an air traffic controller that doesn't own any planes.
Oh my God. I've called them something far more nefarious. I always thought SWIFT, honestly, I really want to share this with the audience. I have always believed that SWIFT was really a mechanism to weaponize the dollar against the whole world and usher in this new world order. And they probably failed. I don't know, but that's a whole different discussion.
The de-dollarization is a response to weaponized dollar. BRICS is a union that manifests and consolidates the de-dollarization theme. XRP, I believe, okay, this is a really important point. It's not new to you at all, but some people who are not really too advanced in their knowledge base and experience, XRP is going to replace the Treasury bill in trade payment.
Yep.
And that's just the start, because the reserves are going to be largely stable coins. And if RLUSD gets a dominant piece, then Ripple's RLUSD and XRP are going to be largely replacement assets for the dollar.
That's correct.
Okay, this is very exciting. The Clarity Act. Okay, it's going to be through stable coins, and they're going to offer a yield. And Ripple, since it has a bank license, they're ordered. It's called a conditional bank license. The only condition is, okay, set up shop, get everything in order. One thing I want them to do, Versan, I want them to have an acquisition of a lending arm that takes Bitcoin, Ethereum, and XRP as collateral and delivers RLUSD in loan terms. And then when it goes up tenfold, you can sell a little bit of your XRP to pay off the loan.
Well, that's why I once tweeted, to your point, I said, I don't want to stake my XRP or lend it until I get paid to.
Yeah.
This article I wrote recently on the Patreon, I explain in detail how XRP actually does become a global reserve asset. And I explain the Clarity Act, sovereign adoption, and sovereign adoption means global legitimacy. Check. We've done that. The Clarity unlocks legal accessibility. We're almost there. You can anticipate that. XRP as a reserve settlement asset, that's already become increasingly clear. Redefining value and utility, that's clear. Now conclusion as well, liquidity bridge to reserve engine. So I've really tried to break this down piece by piece, but everything that's in this article is playing out in real time, little by little. And to carry on the conversation, I want your comments on this as well. But there's another technology that I think is not functioning as a competitor. Maybe you have a different view. I see them as complementary layers within the same architecture, and that's the XLM, because if you look very closely at their cycles, they often mirror each other. And everything that Ripple has been doing, Stellar has been moving in synchronization quietly behind the scenes. And I think together they seem to be appearing to consolidate all value flows in some sort of two-tier financial system, one layered for institutional settlement like XRP and liquidity redistribution. And the other one I think is really focused on retail access via UBI, CBDC, stablecoin, some mechanism. So just from your vantage point, is that the architecture that you see being built, or what are your thoughts?
It is. Okay, I'm actually learning. I'll be honest. I'm learning more about Stellar and XLM because I heard a year ago that they were going to be like Mutt and Jeff. They're going to be like, X and Y. They're going to be just teams that take over because they're each ISO 222 compatible, compliant rather. And then the more I learn, the more I hear, the more I learn, the more I hear. XLM it's going to have some international role, but not much. It's going to have a very big US role. And I think it's going to be in retail and maybe not much more than retail in the United States. ATMs, shopping at stores like Home Depot or groceries.
Still pretty big. You're still talking about reaching to a mass amounts of the population and banking the unbanked, financial inclusion, all that nonsense.
Yeah,
so
well,
they're going to be targeting a lot of the people out there.
But there's a factor that must be considered, and it's part of the equation. From what I understand, and I'm struggling. I'm trying to learn. Stellar has a tight linkage with USDC, and that operates on the Stellar rails. So there's an association with the dollar-based stablecoin that is not seen as neutral. Therefore, Stellar's XLM will not be involved in settlement of trade for crude oil and natural gas internationally. Not for farm products for, the big three, wheat, soy, and corn. XLM is going to be where the dollar is favored and not questioned. And that might not be Brazil. Okay, let's face it. It might not be the Persian Gulf. That might be US and Canada. And that is a big pond for XLM. My kind of a joke is look for XLM to go up tenfold and XRP to go up 100-fold.
Yeah.
Okay.
They both complement each other, but still one role has a more effective, critical, unique take on it. So.
XRP is more neutral.
Of course, yes, and that's what I think gives it more of the power there, because it's sovereign.
But it's also got a lot more liquidity because the building blocks are just all over the place.
No, I agree with you entirely.
There's something else that came out of that meeting regarding Jake, and it was there's a lot more going on behind the scenes between Ripple and BlackRock, and it's all good.
Oh yeah.
Okay, now I heard something, and I don't want to make a big thing of it, but it could be that Ripple had a lot of its development behind BlackRock walls. And Ripple is now the public face, and BlackRock is the private equity face. And let's face it, BlackRock does a lot of things we don't like. They're involved in smart cities. They're involved in a lot of different things, predatory work regarding mortgages, a lot of things I don't like. But I like to say that now we're getting the rebound. We have been called useful idiots for a long time. Now we're going to be able to work the angle of the useful giants. What if BlackRock is critical in giving a $500 XRP price down the road?
Yeah.
Thank you very much. I just hope that they don't earn like a couple $1 trillion extra and work the smart city angle. I don't want that.
Yeah, nobody does. And I think if you think about this from a different take, if you look at kind of how we're so involved in all these wars, and we're using tax dollars to really do it. So in a sense, we're kind of financing our own destruction.
Okay, 7.5% of the total wealth.
Oh yeah, I forgot.
What is JPM's total wealth, you know?
So this was sent to me in 2023 by a good friend of mine, very deep researcher in this ecosystem. I'm not going to share his name. Okay, and he sent me this, and it was an article about a leaked report. I have the other screenshots because the minute I posted it, it got traction and it was deleted immediately. Ooh. And it was explaining how JP Morgan and BlackRock, I know it says just JP Morgan here, but I have the ones for BlackRock as well, explaining how they were both taking a massive position in XRP
in 2022. So they
2023. 2023. Yeah.
All right, so they own it, Versan.
I'm sure.
No. They own it at 10 cents and less.
Wouldn't that be something? Yeah.
Or is it?
I got in at 18 cents, but that was 2021. So.
Okay, 18 cents to 21. Okay, good.
Yeah. Listen, so I have
a client who bought 1 million at 1.2 cents.
Oh, it's not bad.
1.1 million coins.
Made some money.
$12,000. He said, Jim, that's all it was. It's a guy who did a consult call. He's a Christian, and he's made a solemn promise to me. Maybe he will offer me a lifeboat.
I'll be the one to help you with that too. You know, you and I are good friends, Jim, and I got your back covered at all times.
I don't have a boatload. I have a chunk. You have a boatload? That's good.
I have a decent, sizable position in a few assets. I got in very early, and I've been accepting XRP payments for a lot of my consultations.
That's good.
I haven't had to buy XRP. I've been just accumulating along the way.
Force them to buy it.
Let them buy it, and they can send it.
I got a bunch of Bitcoin in 2016, 17, and 18 from clients. So that's anyway.
You're blessed, you know. Yeah. So real quick, Jim. For the audience, I know a lot of people are curious about this. From your perspective, like what is now taking so long for all of this? Why is there so much justice as well being delayed by design? Or are we misunderstanding how the systemic change actually unfolds? And finally, is it possible that the real transition is completely just financial rather than political? Meaning like power is quietly being stripped through infrastructure rather than public trials?
Oh, what a tough question. I'll give you my best answer in a brief form.
Okay.
I got some real sharp wisdom 10 years ago. In order, it went like this. In order for the reset, let's just call it the reset, okay? You could call it a transition. You call it reform. You can call it an exercise of justice, a chapter of justice. Let's just call it a reset. In order for the reset to come with justice and a better system, we need 90% of the cabal to be eliminated, bankrupted, and killed.
I agree.
We're not there. We're getting there.
Well,
we're close. We're close. And it angers a lot of people to say that.
Me too. I mean, it really does. I've seen things that, have put me in tears and have, I think, disrupted my emotional stance on the way I look at the world. And it's really hurt me. I've been scarred by some of the things I've seen. And when I look around, the questions that I ask, everything I do in this ecosystem is naturally leading to some sort of disclosure, because we've discussed this before, but there's no doubt that a lot of the information that's long considered to be taboo is now being openly discussed. But at the same time, Jim, I'm seeing much that's being revealed. It feels curated, it feels reframed, and even incomplete.
There are going to be 3 levels of revelation. One will be bribery, treason, and trafficking. The second level that we may not ever get information on, the second level will be torture and really nefarious stuff,
right?
Adrenochrome, etc. And the third level, you're never going to get your hands on, because it's so diabolic that I don't even want to talk about it or make reference to it. Okay, let me continue in my answer, because we need 90% of the cabal to be eliminated, gutted, bankrupted, and killed. Okay, that is a big statement. Have we eliminated Davos? No. Have we eliminated Bohemian? No. Have we eliminated Bilderbergers? Well, they're kind of minor. They're the visible head.
CFR.
CFR. Yeah, I don't want
foreign relations.
I know. I don't want to get into that part of the globe, because that's where you get marked for kill.
Okay. All right. Let's change it. I just got married.
Okay. All right. So there's more. The quantum financial system is part of all this. It enables faster transactions. I think it's going to be interwoven with XRP in a way that I don't understand yet, and I don't need to understand yet. I just need to know that that's coming, and it will enable some of the speed that we're talking about and boasting about and relying upon. There's also an element of forensic financial analysis, and that's tracking money laundering. It's tracking counterfeit. I believe there's a hidden angle of Venezuela as a counterfeit center.
Could be.
Okay. There's a lot going on there. I don't want to get caught up in Venezuela. Just leave that alone, because we don't have another half an
enough yet. Right.
We don't have 20, 30 minutes. I got some information about them, but I don't have time. There's so many other types of fraud. JP Morgan in Building 7 was involved in destroying evidence of duplicate serial numbers for treasury bonds over a 30-year period. Well, holy shit. Is that 3 trillion or is it 4? Okay, there's so much fraud and criminality. There's an entire business, and Venezuela was involved in this, in kidnapping for hire, murder for hire, and defrauding a company with hacking for hire. Okay, there's so much criminality. Okay, pardon me. The QFS is going to be integral for that, for financial fraud analysis. Okay, I'm hearing from military sources that we are well along in this victory over the cabal. We're moving the needle toward 90%. We're well along. And when you hear about one Rothschild caving in, that's really good news. The trouble is there's 3 or 4 of them.
Yeah, well, I've noticed a lot of these people do drop truth bombs while still being corrupt, or at least participating.
They're boasting and they're also revealing to their victims, so the victim walks forward on their own voluntary means. That's a very big
They're
part.
basically giving you choice, because the way I see it is that disclosure without context could be just as dangerous as secrecy, because it shapes the perception without delivering the full understanding to people. And a lot of people, please bear with me, Jim, have been told for many years to trust the plan. Yet a lot of the evidence, and I'm sorry to say this, seems that there's a consolidation of power rather than a decentralization. And a lot of the narratives are simply amplified while the structural control seems to deepen. And a lot of people want to brush this off and dismiss it. So what do you think is missing here? Like, where am I wrong in all of
What's
this?
missing is the decentralized finance. That's missing. We're going to get that. Now, let me just bring up an example, and it's kind of fun, and it's real and it's relevant today. We got about a $90 silver price in Shanghai. We have reports that in Tokyo it's $130. We have COMEX reporting it in the low 70s. We haven't heard what the silver price is in Sydney, Australia. We haven't heard the silver price in Singapore. We haven't heard it in Johannesburg. We've not heard it in Moscow. We're getting right now a decentralized pricing of silver. Okay, tough question. And a friend of mine is working on this right now. He said, Jim, what's the price of silver? I said, where is your reference?
Okay.
Is it Asia? Is it Japan? I mean, it's not even.
It's all over, Jim. I think it's all over.
It's not the same price in Shanghai versus Tokyo.
Yeah, the control mechanisms are shifting. I totally agree with you.
Okay, it's decentralized. It's Versan. It's decentralizing.
Okay.
What if Zurich? What if Zurich throws a big wrench in the COMEX works by saying, we honor the Shanghai price? Ooh!
And then you kind of lose control, and banks go bust in the US, which will hurt a lot of people and businesses. But for us to understand what you just said there as well, we have to be realistic about how the debt-based Ponzi scheme really works, because we can't talk about any of this transition, the systemic transition, without at least addressing the debt cycles, because officially the United States now has, that's what everyone's saying. Oh, we're past $38.5 trillion. Unofficially, and I'm going to be honest here about this, I think when you look at the unfunded liabilities, the derivatives market, the exposure, the off-balance sheet bullshit and obligations that are unaccounted for, you're over 100 trillion already. It's mathematically unserviceable at this point, but this is where it gets interesting. Based on how the debt-based system works, in regardless of what we just talked about there, all asset prices are going to rise. So I wouldn't be surprised to see silver crossing these thresholds, even though I do agree with you on your analysis as far as the connection to the
decentralized. Okay, here's another example of decentralized. Right now, and this has been going on for at least 6 months and not well publicized, the treasury bonds are being liquidated. And they're being liquidated at discount.
So what happens next?
So here's the point, though. In Europe, the treasury bond might have a different discount than London. In Singapore, it might have a different discount. In Japan, it might have a different discount. In Shanghai, a different discount. In Australia, a different discount. In Johannesburg, the same locations that I mentioned for silver, they might have a different discount on liquidating treasury bonds. Treasury bonds are in liquidation right now. I hate to tell people, we are fast losing the legs of the king dollar. The throne is being decayed away. So I believe we're seeing a decentralization right now of treasury bonds in pricing for liquidation. Okay,
well,
in Dubai, in Dubai,
reset is.
Yeah, but in Dubai is another big one. Dubai, they're getting redeemed in Tether. Okay, this is really big. And the Tether being backed by Bitcoin. Oh my gosh. You know, Bitcoin might be the Achilles heel of Tether.
Oh, absolutely. Are you kidding me? Yes.
Well, yeah, but I'm not a big Bitcoin expert or advocate, but I will say this: the Bitcoin maximalists out there, you're the morons in the crowd.
I'm aware.
I
I've
don't
been
mind
trying
listening.
to say it so nicely, but
I
please
don't
continue.
say it nicely. You're the morons in the crowd, and you're as dumb with crypto as the Democrats are in politics.
That's a short right there. I'm going to make you go viral for that. Oh God, Dr. Jim, you're
No,
fun.
you got a number of Democrat voters out there who liked Kamala and overlooked her word salad, overlooked the fact that she never did anything in the Senate, no accomplishment, just like Barry Obama. They don't know anything about the cultural Marxism, the Democrat voters, cultural Marxism, consolidation of the U.S. government, three branches under the intelligence branch. Whoa! That's a reworking of the three pillars of the U.S. government, and the Democrats don't understand it. They don't understand that the Democrats and their leaders are far more involved in Epstein and child trafficking. I mean, the narco presidents, my gosh, Clinton was a Democrat, and so was Obama, but Baby Bush was a Republican, and oh my gosh. Okay,
Oh,
I don't want
listen,
to
they play both
leave that alone.
sides. Yeah, leave
Leave
it
that.
alone. They
Well,
play
that,
both sides. We already know this.
I got into a big argument with my brother in the late 90s when I said, John, are you aware of the Papa Bush handshake on stage with Bill Clinton? He said, yeah, it doesn't mean anything. They're just, former presidents. I said, no. That's a narco handshake.
The way
They're
they
both
did it.
narco presidents. Okay, I'll leave that alone. I got my point that silver and treasury bonds are being decentralized right now.
Gold,
1 month,
maybe two.
1 month, 1 month, Versan, from now, we're not going to see any more cohesion in the silver price. It's going to be all over the place. Tokyo. Why is Tokyo the highest price for silver? Because they're having the biggest problem in the reversal of the carry trade. Money's coming home. And I got news for people. It's not just the Japanese financial firms who are bringing it home to Tokyo. It's Wall Street. It's Swiss, what do you call it? Wealth management funds. Swiss. They borrowed yen, and now they're paying it back. We're going to see a run. We're going to see a good, positive bull run in the yen. And it's going to cause a problem that XRP will solve.
Oh, absolutely. I believe it was always meant to be the solution. Before we kind of close up here, there are a lot of people in the ecosystem that keep talking about stablecoins as if they're really the safe corner of all of this digital money. And I think a lot of people are wrong. And I really think the assumption is just naive and very dangerous, because the entire stablecoin was never meant to protect you, really. It was meant to protect the dollar. And every time, again, a new stablecoin is minted, that means a new buyer for US Treasury is created. And most people still have no idea what this really means by design. So,
but not all. There's still a lot of Ethereum used as a collateral for stable coins. My view is it's the goal was to make it stable versus the currencies which are unstable.
I understand that, but it still creates this artificial demand because the underlying mechanics say desperation. Yeah.
I know. I mean, and there's going to be a wake up moment. It's going to happen, I think, in the next 6 to 8 months. That the stable coins have too many euro bonds and too many treasury bonds.
Toxic
and what are we going to do? Toxic acid. What are we going to do about it?
Dump it on somebody else?
I think they're going to slowly remove them and replace them with gold-based instruments in a way that you don't notice. That, I think, is the goal, okay? It's just a hunch, okay?
No, I agree with you. All I'm saying is that I think stable coins ultimately are going to fail because their value is inseparable from the dollar, an asset whose purchasing power continues to decline through inflation. Therefore, they are a temporary parking spot for capital, not store of value. So just trusting them is especially reckless.
The treasuries are unstable, and they are a popular collateral for stablecoin. I agree. I think that they're going to slowly remove the treasuries as collateral in a manner that avoids a big crisis, but they're not going to succeed. And I don't know how it's going to play out.
We can speculate, but I think we have an idea.
I think the BRICS nations are going to try to make the stablecoin unstable and a problem, and I don't know how they're going to do it. Right now, there's an acceleration of the BRICS nations in dumping treasuries, an acceleration. And you know, they're taking Tether. I don't think they're holding Tether, Versan. I don't know this for sure. I think they're taking Tether and then they're using Tether to do something and invest in other instruments.
Exactly. Thank you. I mean, the fact that Tether's not even buying their own treasury bills, and that's what's supposedly backing their stable coins, it's a red flag. It tells you what they're doing. They're buying gold, man.
Well, if a Gulf monarchy accept a bunch of Tether for dumping treasuries, what are they doing with it? I think they're putting it immediately into their LNG infrastructure. I think they're buying a ship. I think they're buying something that's tangible, and I think they're scared shitless of holding Tether. That's just my okay. All right.
Yeah. I've written articles on this for years, so I totally agree with you, and I'm just glad you and I can actually have these grounded discussions about all of this happening. So, with that, we have covered a lot of ground today: precious metals, digital assets, the evolving financial landscape, and so forth. So, these are the forces that are shaping our world in most ways people aren't paying really a good attention to. So, Jim, I do want to thank you for sharing your insights, your analysis, and of course, your perspective. It's always a pleasure having you on the program.
And some clowns are impersonating me. I have no postings anywhere ever on a social network ever. So if you see Jim Willie 1251 or Jim Willie book or Jim Willie study or Jim Willie whatever, and they're pretending to be me, they're liars. Ask the person, what's the name of your thesis advisor at Carnegie Mellon?
I have something better. Why don't you tell the audience where exactly they can find you? And I'll include in the description. Don't worry.
Okay, it's golden-jackass.com.
Excellent.
I'm in my 22nd year. So I've been at this for a long time. I started when I was 52 years old, and I was kind of a young Turk, young buck. Golden-jackass.com. It has a subscribe button. It has a consult button. I did a consult a couple of days ago, a lot of fun, interesting person. Did a consult call 5 days ago, interesting person again. Almost nobody who's boring does a consult order and a call with me. There's also a donate button because honestly, I've ruffled a lot of very evil dark forces and their corners and covens, and I've been harmed. And if you want to help me out, that's great. Hit the donate button, hit the sponsor button. But the flagship is the newsletter, and it comes out in the last 2 or 3 days of every month. I just posted. It was a rough one to write because so much is happening, and how am I going to describe the silver market and its breakdown and the repo emergency funds and the delay in gratification for XRP? So I did my best and made a few calls. Let me just say the silver price right now, okay, I don't know how many people understand what a logarithmic curve is, but it just means that 10, 20, 30, 40, 50, and you have smaller increments as it gets higher. So go 10, 20, 30, 40, and then maybe 60 and 80, and it gets tighter. We're exponential on a logarithmic curve. We're exponential on a logarithmic scale, which means we're hyper exponential right now. And that doesn't mean a lot to non-mathematical people. Okay, I pointed out in the November report that we are no longer on that linear curve. We have turned into a curvature upward in silver. And I said, Fibonacci's in the room, 10, 20, 30, 50, 80, 130. I said, we're going to blast from 50 to 80, Versan.
And you were right.
We did.
You were correct.
Fibonacci says we're going to have trouble at 80 for no other reason than there's so much profit to take, and there's so much like diversification and just consolidate and wait. And then we go to 130. People are going to say we're going to have a hard time at 100. I say maybe 3 or 4 days. Okay. When people ask me, is it time to sell silver? I said, how are you going to feel when it's 175? Is it time to sell gold? How are you going to feel when it's 5,800 in just a few months? I don't know. I can't remember who it was. I think it was Goldman Sachs. I think they put out a 6,600 price target. But what they should have done was, in keeping with their own internal culture, Goldman Sachs should have made a 6660 gold forecast. Let that sink in. Sorry. No, they should have made a 6660 gold forecast.
Well, to your point and to the audience, 2 things very important. The longer you wait to buy, the higher the peak you're going to chase. Because the way I look at it is, investing isn't really about price anymore. It's about how fast your dollars are depreciating or losing value. And the second thing is, people need to start asking themselves the right questions, because when you think about what fiat is going to be worth when inflation finally shows up, and the only place it really can't hide is going to be gold and silver. And that's when things are going to begin to reprice. In fact, we're already starting to see it based on your analysis and everything that's unfolding.
The dollar is not going down.
Yes, that's correct.
The dollar is going down versus
Mm-hmm.
The dollar is going down versus gold and silver.
Yeah.
It's not going down versus the euro. In fact, right now, the euro is sinking and it's lifting the dollar index. Okay. I've been saying
Europe's
this for
in a bad place.
I think I'll make a forecast. Sometime between June and December, the European Union is going to have a dissolution, failure, fall apart, and end.
Well, that's why they're trying to take us to war. Absolutely. I mean, they're looking for a scapegoat. So
war is glue.
I understand.
And the glue is made red and blood.
Yeah, it's very sad. Hopefully we can put an end to this and stop financing our own destruction. That's what I was saying earlier. But Jim, I know you're a busy man. You have another call, so do I. I want to thank you again just for sharing your wisdom and your perspective. It's just
golden-jackass.com.
Okay, great. Yeah, so again, it's a gift to hear from someone like yourself who really cares about understanding these systems, but breaking it down. And to our listeners, I want to thank you all for joining us, for staying curious and approaching the world with both awareness and empathy. That's very important. So hopefully 2026 brings all of us new insights, courage, and of course, compassion in everything we do together. So from all of us here, and peace. It's a good one. I forgot that.
Peace of mind also. I'm going crazy the last few weeks.
I've been crazy for a long time. So, just from all of us here at the Black Swan Capitalists, and even to you, Jim, we want you to take care of yourself and everybody else. And just remember, we love each other here, and we're always hoping for the best. So until then, I will see you next time.
Okay. Stay safe. Thank you very much. Bye now.
Take care. Thank you.